the other day. Aha. Um, that should have fixed it. Now that I'm a tech guy, there's a slight delay in the YouTube versus the VTF, but if anybody can tell me if it now works in the YouTube, that would be nice. Uh, so what I was saying was, I really feel like today was a day to go for it. Day 4 to the upside here. Extreme extension again. Short-term tactical in the red zone for the third day in a row. I was just saying, I don't think that I've ever seen short-term tactical in the red zone more than 3 days in a row. So well, I'm curious to see where it is tomorrow. We did kind of consolidate and go sideways most of the day and be flattish at the close. That might be enough of a time correction to get that short-term tactical out of the red zone. But it'll be interesting to see if it's still up there because I really don't think I've ever seen that in the red zone or in the green zone more than 3 days in a row. So, the bottom line is I felt that today was a day to go for it. I know that it's Veterans Day, and thank you to all the veterans who may be partaking in our group. But I know today's Veterans Day, so the bond market's closed. So it could mean that today could be a little bit quieter. It also could have meant that today had a little less liquidity, which could have given us bigger moves if we did get directional moves. At the end of the day, from an index level, I actually felt if you look at like a 5 minute chart that it was pretty boring. And there was, I think, fairly mixed results on my kind of let's go for it call. Um, some things worked out pretty well initially off the open. Some things did not. So, um, sorry, just still trading some stuff. Tesla was definitely a big focus for me in this massive day 4 gap up that came from Tesla. Um, I mean, the extensionist thing. I mean, things are starting to get a little silly, and now we're also even seeing like these spaces of the world start to pick up, like these real garbage names. And Bitcoin went through the roof over the weekend and continued throughout the day today. What's your final quote in this Bitcoin? Like 83, 84,000? I'm really not exactly sure. Um, but things seem like they're getting a little bit silly. So I wanted to kind of go for it. I started putting some shorts on pre-market, particularly with Tesla, and then we kind of, this was a great signal to short back through this 350 on this third 5 minute bar, 88K. Wow, thanks, Rich. Um, Great signal there for that short. And then for me, I had a decent sized position on there, but I wanted to be really greedy on this trade. I thought that there was a lot of reward potential. This is what I mean by, going for it when you think that the potential is there. It won't work all the time. One thing I said this morning was I think today's the day to go for it, but I could be a day early. So we'll see if tomorrow we actually get a pull or anything. Um, but I know that I went for it, and the way that I was very, very greedy at a certain point in Tesla today hurt me, and I would not change it. I had a really good Tesla position on, and then decided to more than double my position on the break of 341 in this 10 a.m. candle here to see if I could get a real push into this gap over, breaking through these moving averages and honestly going for a gap fill. Um, I wanted to move in Tesla to at least 310 off that momentum ad that I put on. I did cover like a little bit into this move. That low was 336.50, but it was a very little bit. And my ad, I basically gave back up to highs. So um by the time you could make the argument that I turned a winner into a loser with that ad, and I usually don't add for momentum. It's usually not actually how I trade. I usually don't add on the way down like that in a short trade, especially if it's counter trend. But the degree of insane extension that's here on the daily, I felt that a move for a gap fill back to 320 or even overshooting that and doing a percentage of Friday and getting you down to 3 10 feels very reasonable when the ADMA is still down at 295. So I went for it. Already had a decent short position on, added pretty heavily through 341, covered very, very small into this down move. Added a little bit of stock back into the bounce back, but we were just riding up on this moving average. And then I got stopped out on of almost everything on the break of 350. And then a trade that at one point I had a very, very nice open profit in. I finished negative. And again, that's typically not how I trade. There is a saying that I'm a believer in, which is, don't there's a lot of traditional trading sayings that I actually don't like, but this is one that I do like. Don't turn a winner into a loser. And I just felt that the reward potential on this was so big and that I could have made so much money on it if the trade idea was right, that I decided with this ad, and I could have tightened up a stop on that ad and used two different stops, something like that, and had a little bit tighter of a game plan, and in which case maybe still would have made money. But I didn't. I gave it all the way back to the high, and I didn't want to risk getting shaken out of that extra stock, whatever. And then I got stopped out on this 11:05 candle when it broke through 350 and broke highs for a loss, for a decent loss. And then I kept a small like feeler on that I didn't get myself stopped out of, just to kind of watch a little bit. And then as this thing started to go, I was actually mentally comparing this move here at 11 a.m. to the move on Friday that happened from 10:10 to this high at 10:35, which we shorted on Friday. A bunch of us shorted on Friday, and it was actually a good trade into this pullback here. Tesla short, actually, as crazy as Tesla's move was on Friday, Tesla short ended up being one of my best names because I wasn't greedy. I was patient. I caught, this signal here, covered, I don't remember exactly, 80, 90% of my position in this down move, and then got stopped out of the remaining 10% of my position at 105 when new highs broke on the stock. So I was actually kind of comparing in my head this move to this move, or this one was like one, two, three, four. The fifth candle was like an acceleration bar. This was similar, different. We just broke out one, two, three, four. Here, the fifth candle was like a little bit of a doji, and then the sixth candle pushed highs and then broke back down with a lot of extension even on a 5-minute chart now for 11:30 in the morning, let alone what the daily chart actually looks like. So I was able to reestablish the short there, but honestly, only around half the size of what I had in the trade that I got stopped out of. So the rest of the day, I think I traded Tesla okay. But by the close, even though I am swinging some to the short side and I see it just moved up $4 or whatever here after hours, um, I am deciding to keep some just because of the now extraordinarily extreme um, extension that we're looking at on the daily chart. So similar to what I did with Nvidia and what I'm doing with some of these other shorts, NVIDIA actually worked great. I'm kind of managing my short to the 80 MA on the daily on some of these things off that extension. So NVIDIA gave that move back down today. So I liquidated my position and I moved on. NVIDIA was surprisingly relatively weak. I actually was not expecting that. At one point in the morning meeting, even though I had NVIDIA on my short list for today, um, I kind of said I want to take it off my short list because I felt it was actually trading pretty strong in the pre-market and was not the best bang for your buck. Did not have enough extension. I was already swinging it, so I was going to stick with the trade. But for people that were flat, I felt it did not have enough extension to be as good of a short. Was acting relatively weak, sorry, relatively strong pre-market. So I decided to, not uh, press the Nvidia short to everyone else. For me, it's my best name on the day, but I don't think I would have taken that trade if I didn't already have it over the weekend. So I liquidated Nvidia, and I decided just off this degree of extension with this day 4 here to keep some Tesla. So we'll see obviously what happens with Tesla. Um, Sorry, give me 1 second. I put my bid in the wrong spot. Or did I? Hold on. Okay, I'm good. So we'll see what happens with Tesla off this extension. I just got a false print here that's ruining my chart, and it's trading up after hours, which is also ruining the chart. But it's like a pretty legit doji. It closed a bit above where it opened, but there's big tails on both sides with a massive degree of extension. So for me, that's just something that I want to keep, and I'm gonna also manage this either to my target, or if the ADMA gets above my target, then I will manage it to the AEMA. Um, so that is Tesla. Coin, I shorted in the late afternoon today. Um, I shorted it on this candle here at 210 when it looked like to me it was later in the day, which I liked. Also up huge and extended and all that fun stuff. But it looked to me like it was breaking through some kind of minor support here. It might put some pressure onto this 21 EMA, which had not broken yet. So I thought maybe I could get like a real roll down into the close and coin. So I shorted some on that bar, covered half of it pretty quickly, and then the other half, this is another one that I'm being pretty greedy on. Looking for a move to 310 in this. Which, I don't think that's insane when the ADMA is at 252 and the stock's on a day four, and I'm just looking for a percentage retracement of today's candle. But it'll be a good risk reward for me if it gives me some follow through tomorrow. So coin is one that I'm keeping. I almost put some MSTR in the close, and I got lucky that I didn't. um, because it looked like someone was getting liquidated on a short position in the close with that last pop, that Bitcoin wasn't moving that way anymore. The other names weren't moving that way anymore. I tried to short some MSTR back through 340 here at the 315 candle with this little third bar up doji to see if I could get a deeper pull when it looked like coin and some of the other names were potentially rolling over as well. But I never, I did just amateur hour over here. I didn't notice that it was hard to borrow. Tried to hit the bid and nothing happened, obviously. The borrow was very cheap, but by the time I, got the locate, it had dropped like $2 or so. And I didn't want to pay down that much in such a strong stock that had been riding up these moving averages. So never actually took that trade. Um, so, that's pretty much it. Still, super index focused. Some of these names on the short side work better than others. Apple was really relatively weak early on in the day, though it did tail up, which was okay. Amazon, tricky off the open, but if anybody caught this versus Friday's high, that would work well, whereas Google did not. Um, I think I called out, even though I didn't take it, a Google short off the high of the second candle, and that idea obviously did not work at all. Just totally failed. Um, Trying to think if there's anything else to talk about. Yeah, really, the indexes were unfortunately boring. I felt in a couple situations today with like my Tesla short that I had on. If I just got a little market help, that one would have worked out really well. The Qs were still an okay opening short, which I think we communicated pretty well. But the spies did absolutely nothing today. The IWM is relatively strong, but basically kind of went sideways throughout the trading session. And that's pretty much it. So at the end of the day here, these this market pretty much closed flat. So it's almost hard to say, like, do we have to reset our count now? Like tomorrow, not technically a day five for the Qs if we gap up. But it doesn't really matter, I don't think, too much, because you'll still have a good amount of extension. Though we might, if we have a flat open, we'll be out of the extreme extension zone on the Qs as well. But I'm still looking for corrective action to this ADMA for these indexes. Whether that's through time or through price is yet to be seen. I'm a little bit nervous that it's going to be more of a price correction than time correction because of the strong underlying bid that's still there in the market. But I do think that, some degree of the positioning bid, the FOMO bid, should be gone. And I'm saying that off of this Goldman Sachs sentiment positioning indicator that Pat had in his morning note that got really stretched back up last week. So I think that this represents a lot of the FOMO buying that was out there. A lot of the other buying was coming from uh, Vanna in the SPX related to um, hedges that are not working out, that very quickly became worthless as volatility went down very hard, very fast, as seen in the VIX. So that created a very heavy underlying bid in the SPX. It's not necessarily done if the VIX continues to go down, but I think that the strongest portion of that at this point should be behind us. And there are also some VIX puts and SPX 6000 calls that I think we could see some profit taking on that might actually act as a little bit of an inverse flow to the downside. But at the same time as all that, we do have $6 billion a day in buybacks still coming online. And according to the Bank of America portion of Pat's note this morning, we have a pretty large increase in positive gamma now this morning as well. So there's a chance that just tightens this market up and that turns this market more into time correction than price correction. But that goes back to, the way that I'm taking some of these counter trades that I'm in. I'm managing them to the ADMA on their daily charts. So as that ADMA catches up, my profit potential becomes less and less. And then that can eventually satisfy the problem of how do I get back long this market? Because that's what I really want. I'm not bearish on this market. This is technical, tactical, looking for pullbacks off of a massive upside move. This is not me looking at the technicals and saying that they're bearish, or looking at any situation, any piece of information at all, and saying that they're bearish. If anything, I think that the market dynamics right now are extraordinarily bullish outside of the upside extension and 3 days in a row, short term tactical being in the red and everything else. So the best case situation for me at least would be a price correction down to the ADMA for the market and for coin and for Tesla and a couple of the shorts that I still have on. And then that'll be the opportunity at that point to, you know, build out of those shorts, liquidate the majority of those shorts, and then start to look for the signal to start buying in, because that buyback's not going anywhere. The end of the year bullish support flows that are just a natural part of how the market works are not going anywhere. So I don't. The one thing that I've really not liked about trying to short this market has just been I don't like the idea of fighting flow, but I also have extension rules that are really important to me that have primarily paid me very, very well over the course of the recent years since I've started to implement them. So for me, my rules are always number one. Um, if I have to choose between my own logic, which is pretty bullish right now, and my rules, I will always choose my trading rules. And my trading rules say that I'm not to be buying this degree of extension on like a morning like this morning. I should be potentially looking for shorts, and I have been, but also just recognizing what I'm actually looking for here, which is not a reversal of this market. The flow is too strong, the technicals are too bullish. It's just a matter of how do we satisfy this extension, because some of this stuff is getting a little silly. Some of these daily charts just get like this Tesla daily chart's a little ridiculous in my opinion at this point. Um, I turned decidedly bullish in Tesla and flipped the script on my thought process off that last earnings report. But and sure, I get it. Tesla's Elon Musk's involvement in the Trump campaign is a good thing for Tesla stock. I get it, but to give me a move from 250 to 360 over the course of 4 days that goes vertically up typically is not something that can be this degree of this move can't be sustainable. And while I prefer a price correction, if I can get even these things just to move sideways and just trade them back and forth in the range, that'll be okay too. So we will see. We will see. That's all that I've got. I am happy to answer any questions that anybody has or take a look at any charts that anybody may want me to look at. From Kirill here in the VTF. One trader who traded during the dot-com era pointed that our current market could be similar to what the NASDAQ composite was in October 99. And further, what are your thoughts on whether we can see similar scenario where we're still early in the bull run? Um, so I think that there's a real chance that we're relatively early in the bull run. Though I always like to take things one step at a time. I would describe myself right now as bullish through year end, probably, and then you get to January effect. So let's say right now I'm pretty bullish on this market through OpEx January through mid-January, and then we'll kind of reassess things as time goes by at that point. I don't have too much of an opinion beyond there because the time horizon becomes too far out, though I think that there's a chance that come that mid-January OpEx that we get a little bit more of a there's an opportunity for the market to pull back. But again, that's, over 2 months away at this point. So once you take time, um, you know, definitely bullish on this market. I don't like the comparison though to the Nasdaq in October '99. I think it's a very different market. I know where some of that comparison comes from, particularly when you look at like, there's all this like chatter and charts about Nvidia compared to Cisco, and charts about Nvidia's like the ratio of like the Nvidia multiple, I mean not multiple, the market cap versus like the GDP of the world or something I've seen. I don't remember exactly what it was because I kind of gloss over that stuff. Is honestly not very important. It's just like people trying to get clicks. Um, but the difference between 99 and now is that these are real companies. All those companies then, not all of them, but um, a lot of them, didn't even have revenue. They weren't even like the .com companies. A lot of them weren't real companies at all. They did not have revenue. And I get it. Cisco got overbought because people were like, instead of trying to choose the right .com, I'll buy the Rails, which at that point was Cisco. So I think that's where a lot of the comparisons are with Nvidia. And we did see some prominent investor out of England come out with a pretty bearish thought process on Nvidia this morning as well. Um, but I'm not ready to make those calls, and I think that the comparisons are stretched. Is it possible that we're early in a bull market? Yes. Is it possible that we're at the end of a bull market? Yes. Let's just take it one step at a time and focus on our technicals and our flow data. And the technicals and the flow data are both super bullish right now, albeit extended. And that's where I think we should focus on taking it at this point, kind of taking it one step at a time. Thanks for the question, Carol. What else, guys? And anything else? There's a lot going on. Happy to answer any questions anybody may has on trading ideas, trading execution, trading psychology, trading, whatever traders feel like they need assistance with, help with. I'm here for it. Give it a minute, otherwise I'll wrap it up. Tried APP short at 11, but it failed. I liked the idea of going after these trades. I know APP got brought up in the morning meeting, and I thought it was difficult just because it had pulled back first of all, it's an expensive name, and it had already pulled back a ton pre-market. But then it gave a very hard, fast pull with the Nasdaq right in the beginning of the day. You tried it at 11, I would assume off this like little intraday resistance here, and it just worked. It didn't work, so you stop yourself out and you move on. So, you know, and it's unfortunate. Like, I don't like this candle here in this APP because it doesn't lead. I don't doesn't lead to like I think a really good short setup now. Um, for tomorrow at least. Like maybe if it gaps up tomorrow and then they trade it down, you could try to short it back through the inside day high. Or maybe if they gap it down or open it flat, you could be short versus the inside day high. But I like when, if you're gonna run these things, I don't like when they time correct. 'Cause time is a bull's friend. I guess that's what I was even trying to get across when I was saying that I would benefit much more from a price correction than a time correction. Um, Time is a bull's friend. Days like today are overall bullish. And does one day today of sideways-ish action by the close is not going to satisfy 10 plus dollars of upside extension at the index level. But you string together 3 days like today in a row where there's enough sellers that are out there who are technical sellers, maybe like me, who are trying to come in and short, that are offsetting the mechanical buying that's still in the market. Well, what does that turn into? Supply equals demand, that's consolidation. And then that ADMA will catch up. And then what happens is the short sellers like me, um, lose their profitability as the time catches up, and then have to be liquidating their positions by buying on the bid more quickly, and or then stopping myself out if like the bull flag breaks higher. And that's actually the technical mechanics of supply and demand that create a bull flag. A bull flag is, hey, everything is really, really strong here. But we're extended enough where enough supply is coming in, but there's still it's so strong that there's still demand out there, so supply and demand equal out for a period of time. That period of time allows the moving average to catch up. And then when do bull flags typically continue? They continue when the ADMA catches up to the consolidation. It's like textbook how that happens. Doesn't always work perfect, but it's usually what happens. And the supply demand buyer seller dynamics of it are exactly as I just described. Where I can tell you, for me, every day that goes by where we don't get a pull back is just going to mean that I'm going to be bidding out more and more of my shorts to cover, because we're time correcting, not price correcting. And then eventually I'm either all out of it because I bid myself out and we never broke, or I'm stopping myself out because the 80 may caught up and now we're getting bull flag continuation. So we'll see. We'll see. At the same time, some of these stocks, like I was just saying, are getting a little silly, I think, at this point with where some of them are trading. When we reach the ADMA, I'm generally going to be then looking for long setups. Again, let's see what it looks like when it happens. But that's as of now, my thought process is have these shorts on for extension, sell them into extension satisfaction, and also at extensive satisfaction is when you should be looking for long setups. That's my general thought process. The asterisks on that I'm keeping in the back of my head, which is lower probability but not impossible, is if we really see interest rates going through the roof. I need TLT to break this low from November 6th. If TLT breaks that low from November 6th and the 10 years getting to like 4.6% or higher, I'm going to adjust my game plan to be a bit more greedy on those shorts and probably not be as quick to buy back in the equilibrium area. Uh, but if that does not happen, which I don't think it will, then yeah, I generally planning on really liquidating shorts once we have extension satisfaction and looking for long setups at that point. Thanks for the questions, Carol. Over in the YouTube from Brett, what's the best way to taking profits while staying with overextended moves, specifically like MSTR or Tesla? My targets keep getting hit and taking small profit at each, but then it seems like there's no pull. Um, Back comes to buy the dip. Yeah, so game planning on these names, these counter trend names, especially these ones that are going crazy, is really important, I think. Um, it's not that I decided to be as greedy as like possible in Tesla today, and it cost me some money. But even being as greedy as possible, I still did cover some into this down move. So I do think that you got to take, at least a little bit of profit where you can. But for me, it's just not worth the risk of putting that Tesla short on to just be out of my position by like 340, you know, with the amount of extension that it has on the daily. I want to get paid for the risk that I'm putting on. So, it's a balance, and I think that you define that balance through your game plan. And the balance that you need to be able to have is covering enough so that if these dips are super shallow like they have been and then we're breaking new highs, at least you covered some, but keeping some for the bigger move. Like, in coin today, when I did the short at 210, I very quickly covered a little bit over 50% of my position, probably like 60% of my position. And then it was the remaining 40% of my position where I was like, all right, I'm gonna put a small bit out every dollar down to 310. Basically, what was became my game plan at that point. So Now I'm in a situation where I covered enough so that like when we went back to near highs here at 315, I wasn't sweating it. I was unhappy that I wasn't making more money and that I gave back some open P&L, but I definitely wasn't sweating it because I covered enough. So I guess the bottom line is I'm on these shorts that are counter trend. I'm covering like a good percentage of it really quickly to get my risk covered as much as possible, take some size off, and then again, if it's just a quick dip and that's it, and it's coming right back up, I'm not putting myself in a bad spot. But then I'm keeping a decent percentage of my position as well, just off of the daily chart extension with these much bigger reward targets. So net, what ends up happening is if I get like going back to coin, if coin just gave me the move that it gave and then it went up and it stopped me out, it's just sort of like okay, whatever. I make a couple dollars, but it's like nothing to write home about at all. But so taking good percentage of your profit really quickly. But if I do get a move all the way down to 310 in coin, I'm gonna make a lot in the name. So that's kind of how I've been balancing it on the reward side. The risk side is tricky. It depends a little bit on your game plan for entry. So I've kind of been combining a little bit of a build-in approach at these extreme extension levels with looking for signals to get heavier. So the thing about doing like a build-in approach, which basically means like the more extended it becomes, the more you want to be shorting and trying to work the extension, is that especially with the way these names move, you got to really do a very small size there. Because if you're wrong and Tesla and if you start shooting at the open on Friday because you're like, oh my God, it's a day three and this is ridiculous. We're at $300 and the ADMA is down at 279. I couldn't fault you for that process. You're looking at a stock that's extended by $21 on a day three up to try to short it. But even if you're doing like if you're trying to build in short into this up move in Tesla on Friday, you're just getting your face ripped off. So you have to be like really patient on doing that. Really, really wait for like very extreme extension and then do it very, very small or wait for a signal. So for me on Friday, Tesla was too strong. I was not building into this on the short side at all, but I was looking for signals. So um I think I tried Tesla short real quick on the 10 a.m. candle on Friday, and we got this little baby tail down to again because I'm booking a lot of these quick dips. Like I booked a lot on that quick dip, and I got stopped out, and then I reassessed, and then it went vertical here and looked like it was really going parabolic, and that's when when you see Pat start shorting it, you're right there. So that's when I think Pat started shorting it. That's when I came in and shorted it. And this is the same deal. Like there's a lot of extension in Tesla's daily chart at that point in time. But I'm waiting for signals and not building in. So I got my signal, put the shirt on, covered I think like actually like 80% of my position or so into this down move, and then got knocked out of the other 20% at 105 when the new high came in, and I was just done with it for the day. Um, Tesla today, after an additional 7% gap up on the day four, is when I finally said to myself, I might be willing to build in real small at certain points. So my initial game plan was building real small, but if I get a signal, size up. So I was a little bit late on the signal, which was the short back through 350 because I was trading other names, but was able to short more stock, and then I added through 341, which I thought was a break of support. Now I got a lot of size, so now I have a lot of size. I need to have a stop loss. So I'm stopping myself out of almost everything, like I was explaining before on this new high. Kept a little bit of a feeler, and then at this degree of extension, it was a combination of, all right, I'm gonna start to build in here a little bit, but also uh, that last tail there at highs was, I think, a signal. And again, we called it out on the team here, and that was an opportunity to once again get heavier. So that's kind of how I'm balancing both the risk side and the reward side of this. Really important. I know a couple people were talking in the VTF into the close about getting chopped up a little bit on trying to short this upside extension. And that would just be my advice is that you got to really wait for a signal. You got to really got to pick your spots. You really got to cover a good percentage of it very quickly. And then the other percentage of your stock, you can look to be, you should be, I think, actually very greedy with it. Like, and then if you can have, break even trades and small winners with good consistency while putting yourself in the position to be able to capture that bigger move, I'll take that all day. And that's what today turned into. Like I made money short today overall. I'm pretty sure. I made money short today, even though it really wasn't easy. It was just waiting for those signals, covering stock, letting myself get stopped out of things like with Tesla, and that's pretty much it. So thank you for the question, Brett, in the YouTube channel. I hope that helps some of the people in the VTF as well because it was a really good question. All right. Seeing Luke Grimes play at Webster Hall tonight. From Adam, a bit more general question, but at what point should someone realize admit they will never be a successful trader and move on? Um, I don't know because I've never done that. Most questions I can answer from experience, but uh, I've never been able to, even at the worst times of my own trading career, the biggest slumps I've ever had. I was always adamant about figuring it out and becoming successful. I think that the time in which someone should move on is when their own self-defeat overwhelms their inspiration and their inner belief to be able to become successful in the business. Would probably be my answer. So, wake up every day with a fresh head. The previous day's trading session has no effect on the next day's trading session. Build out your rules and follow those rules. I think that confidence comes from preparation as a general rule. Um, my confidence as a trader comes from my preparation and it comes from my game plans. So it's going to be very, very difficult for me to ever be such a fully defeated trader that, I decide to move on as long as I'm able to continue to have confidence from those game plans. Hard part, this happens to me sometimes too, is every once in a while I'll stray from my game plans. And if I do that, I can put myself in a bad spot. That's when I really need to take a big step back and reassess and get back on point with those game plans because it's the game plans that breed the consistency and therefore breed the confidence as well. Thanks, Adam. Perseverance. Oh yeah, and definitely don't be afraid to size down. You have to sometimes. Um, sizing down is important. If you're in a slump, never try to make all your money back. Just just realize the where you are in your situation and just do the right things from where you are. Just you have to accept. We have to be willing to accept our losses, accept our account pullbacks, accept our account for where it is, accept the market for where it is, and then just come in every day and do the right things based on where the market is on that day and where you are personally on that day. You try to overreach and make back and think about your highest, ever P&L and high watermark and all that stuff. You just set yourself up for failure, for continued losses. Yeah, for sure. Downsizing is important. And that's how you rebuild confidence also is through consistency, not necessarily by the dollars that you make. All right. All right. We'll wrap it up there. Have a wonderful night, everybody. I'll see you all tomorrow.